If you remember, a few years ago, Ghana discovered lithium. And because of this, Atlantic Lithium was one of the hottest stocks among Ghana's investors. Even though the company wasn't producing a single ton of lithium, thousands of investors rushed to buy its shares, believing they were getting in early on what could become Ghana's first lithium mine. The excitement helped push the stock higher. But today, the story is very different. The share price has fallen sharply, leaving many investors asking one question: is Atlantic Lithium now a bargain, or is the market warning us about something bigger? To answer that, we need to understand why investors were so excited in the first place. Atlantic Lithium listed on the Ghana Stock Exchange to give local investors the opportunity to own part of the Ewoyaa Lithium Project in Ghana's central region. At the time, lithium was one of the world's fastest growing commodities because of the rapid growth in electric vehicles and battery storage. Investors weren't buying the company because it was making profits. They were buying the future potential of what many believed could become Ghana's first producing lithium mine. But investing in potential comes with risk. As the global lithium market changed and the project took longer to reach production, investor confidence began to weaken. So, what exactly caused Atlantic Lithium share price to keep falling? Let's break it down. Reason number one: Atlantic Lithium still isn't a mining company yet. This is the biggest point many new investors miss. Atlantic Lithium owns one of Ghana's largest hard rock lithium deposits through the Ewoyaa project. But there is one problem: the mine is not yet producing lithium. That means the company currently earns little or no revenue from lithium sales. Instead, it continues to spend money on exploration, engineering, environmental work, and project development. Because of this, investors are valuing future cash flows, not today's profits. So, if you are wondering why investors invested when it came into fusion, investors aren't buying today's profits. They were betting on tomorrow's mines. Reason number two: lithium prices have crashed. During 2021 and 2022, lithium prices surged as demand for electric vehicles exploded. Mining companies around the world rushed to develop new lithium projects. But eventually, supply increased rapidly. EV demand grew more slowly than expected. Battery manufacturers built up inventories. As lithium prices fell sharply, investors reduced what they believe future lithium projects were worth. Atlantic Lithium cannot control global lithium prices, but its valuation is heavily influenced by them. Reason number three: the Ewoyaa project has taken longer than expected. Mining projects move through several stages: exploration, feasibility studies, government approvals, financing, construction, production. Every delay increases uncertainty. Investors naturally begin asking, when will construction start? When will production begin? When will the company finally generate cash? Markets dislike uncertainty, and that uncertainty puts pressure on the share price. Reason number four: financing risk. Building a lithium mine requires hundreds of millions of dollars. Investors therefore ask, where will the money come from? Will the company borrow? Will it issue new shares? Will existing shareholders be diluted? Even before financing is announced, the possibility of dilution can weigh on investor confidence. Reason number five: Ghana's mining policy has added uncertainty. Ghana wants to earn greater value from its strategic mineral resources. Discussions around state participation, fiscal terms, local value addition has created additional uncertainty while negotiations continue. Investors generally prefer certainty before committing more capital. Reason number six: corporate speculation has increased volatility. Atlantic Lithium has experienced periods of trading halts, market speculation relating to Ewoyaa mines lease, and possible corporate transactions. While speculation sometimes pushes prices higher, uncertainty often creates sharp price swings in both directions. Reason number seven: no dividends. And we all know nobody wants to invest in a company that doesn't pay dividends regularly, or once a while at least. Unlike established Ghanaian companies such as MTN Ghana, GCB Bank, and Enterprise Group, Atlantic Lithium does not currently pay dividends. That's because the company is still developing its project rather than generating mining profits. Income investors therefore have little reason to hold the stock. Reason number 8. Investors prefer profitable companies. During uncertain periods, many investors move their money into companies with strong earnings, stable cash flow, reliable dividends. Development stage mining companies are considered high-risk investments, so money often flows elsewhere until confidence improves. Reason number 9. Market psychology. Once a stock begins falling, investor behavior can make things worse. Some traders trigger stop-loss orders. Others sell to protect their capital. New investors wait on the sidelines. With fewer buyers and more sellers, the decline can accelerate. Sometimes, sentiment pushes prices lower than the company's fundamentals alone would justify. Now, let's make a bull case versus bear case for Atlantic Lithium. The bear case first, which means things that make this stock risky. Lithium prices remain weak. Financing becomes more difficult. Project delays continue. Existing shareholders face dilution. The share prices remain under pressure. Now, let's move on to the bull case. That means the things that can make Atlantic Lithium's project profitable in the future. Lithium demand strengthens again. Ewoyaa enters construction and production. Financing is secured on favorable terms. Ghana finalizes remaining approvals. Atlantic Lithium becomes Ghana's first producing lithium mine. If that happens, investors will begin focusing on future earnings rather than today's lack of revenue. So, you may ask, is Atlantic Lithium a bargain or a value trap? The truth is that the falling share price isn't being caused by one single problem. It's the result of several factors happening at the same time. Lower global lithium prices, project delays, financing concerns, changing mining policies, and shifting investor sentiments. For long-term investments, the key question isn't whether the stock has fallen. The real question is whether the Ewoyaa project can successfully move into production and whether lithium prices recover before investor patience runs out. As always, never invest simply because a stock looks cheap. Understand the business, understand the risks, and make decisions based on facts, not emotions. If you found this analysis helpful, subscribe to Money Code Africa, where we break down the Ghana Stock Exchange, personal finance, and investment opportunities in simple terms to help you make smarter financial decisions. And also, don't forget to follow us on other social media handles like TikTok and Facebook. Thank you for watching, and I'll see you in the next one.